Welcome back to this special Indianomics where we are speaking with Sanjiv Chadha, who ends a fairly glorious term in Bank of Baroda, where all metrics, asset quality, profitability, margins, all of them are at multi-year highs. So what went right is what we have been discussing with Mr. Chadha. Thank you very much for your patience, sir. Well, for starters, digitalization or digitization of the bank is something which is very noteworthy. People are talking about it. What do you think are the main achievements here?
So I think we had been making investments in technology for a fair bit of time, particularly I think with Mr. Jayakumar there was investment in a data lake which was there. Two things came along. One was the realization that you need to make sure that the digital agenda touches your customers and transforms the customer experience. The second was, of course, COVID, which again forced us to relook again at our branch network and the centrality it has come to acquire traditionally within banks. So we saw Bob World again as a very important opportunity for us, and we launched that about 1.5 to 2 years back. I think that's really what has been a tremendous success for us. Today we have got something like 3 crore 30 million Bob World customers. About 5 times as many people use Bob World every day as compared to those who come to our 8,000 branches. And this is something which has huge implications in terms of customer service, but more importantly in terms of costs. I'd also just like to draw your attention back to the merger, where we actually had a very aggressive agenda in terms of cost cutting, which included 15% of the branch network being rationalized. Now, digital really gave us the platform whereby that you could actually grow your business without increasing the physical build in proportion, and that has particular relevance to public sector banks, because if there's one area that where we still lack compared to a competition in the private sector are the cost to income ratios, and that is something that you can only change if you have alternative channels which are scalable as compared to the physical branch network. So I think if we look at Bob World today, our focus the last 2 years has been on penetration. Today about 50% of our non-FI customer base uses Bob World. Now the question is, how can you make them use it more and use it for cross-sell? To my mind, over the next few years we should be able to drive the kind of growth we have seen this year, about 18%, without necessarily increasing the build which is there, and that's a competitive advantage. Even if you look at some private sector banks, to grow business by 20%, they need to grow their cost by 20%.
Yes.
Today the fact is, in the last year, overall industry costs grew by 16%, ours would have grown by 8%. This was the third quarter. Fourth quarter there was a small impact of the wage revision. So I think if we can do that, it gives us a huge advantage in terms of customer experience, in terms of costs, in terms of scalability.
Oh, that's a very big one. I don't think I've heard any analyst report mention this, that, other banks may have to raise their cost perhaps by 16%, where Bob can get away with 8% because of the digitalization. I even had those numbers. Your branches have come down over the 3 years from 9,400 to 8,500. And I believe the number of people as well from about 84,000 to 79, 80,000. So clearly, greater productivity. Okay, before I come to the expected credit loss question, a more generic question across banks. What do you think has succeeded? BOB has been the playground for 2 experiments. One, get a private sector banker, and thereafter get SBI bankers. Because SBI was a class apart, we saw SBI bankers appointed to many other public sector banks. Which is the experiment that has succeeded, or what are the elements in both?
So I think it's important that there's always new capabilities that come in within the bank and within the management team also. So I think the fact that Mr. Jayakumar came in, that brought in a lot of new ideas which I think wouldn't have come in otherwise. First, for instance, the idea of a shared service company. Right? So we have Baroda Global Shared Service Company, which has about 5,000 people who work for us, where a lot of repetitive work has gone. If you want feet in the street, you can actually hire it out of there. I think that is something which is very transformative. You alluded to the figures in terms of our staff. I think partly because it has been possible because of the digital agenda, and partly it has been possible because of the fact that we have a shared services company which is there. So I think that was something which was very important. The second was again the possibility that you can get lateral talent from outside in the public sector bank. So I think Mr. Jayakumar started that. It was a great idea, and I think we have taken it forward. That was something which was very good. Third, importance of technology. right? So I think all these things were something which again came in like a breath of fresh air, and I think the opportunity was there for us to capitalize on that. Similarly, again, SBI has great advantages in terms of the soundness of its processes, the fact that its systems work there rather than people. I think those are things that you have tried to build, make sure that there's institutionalization, that there are standards of governance which again can meet the best which are there. So to my mind, again, even as we move forward, for the public sector banks to be able to attract talent, not only again at the level of the operative functionaries, which we have been able to do, but I think even at the top management level is something which is always going to be a positive, simply because of the fact that you get a fresh pair of eyes and a fresh set of ideas.
So I mean, if you are asked for what should be the key takeaways from your tenure, or from both Jayakumar and your tenure, you would say that the government could experiment with private sector heads even in the other public sector banks?
I would say there are maybe 5 or 6 takeaways that I would mention. Again, belief in what is possible. It is possible for a public sector bank to actually to perform at standards which are the best in the market. So that self-belief is something which is very important. The second, that there is no contradiction between a social agenda and the performance agenda. Okay. Today we are very proud that BOB makes proportionately the largest contribution to financial inclusion in the country. We have a 6% market share, a 17% market share in Jan Dhan accounts, right? And there is no conflict between the two agendas. You can do both, right? Third, that you can actually, within the public sector, attract the best talent and retain that. Fourth, that there are some advantages to our business model. Today, many banks might struggle with a 25% attrition. For us, it is just 1 or 2%, because what we do is we get talent at the top, but we have an extremely talented, well-trained, educated workforce which is there at the middle and senior levels. So I think there are great advantages which are there, which we need to just make sure that we capitalize on.
Okay. Oh, that's good to hear. And I mean, a Bank of Baroda man has been sent to Indian Bank, so perhaps the culture will spread, you think?
So absolutely. I think that is, so ultimately again it comes down to the same thing, cross-pollination, being open to new ideas, taking best practices from one bank to the other. So I think Mr. S.L. Jain is doing a great job in Indian Bank. For instance, again, by now starting a shared services company, one business that we did very well, and where again, which gives you the confidence that you can even build new businesses where you're not incumbent, was the cash management business for us. So that's something that Indian Bank is trying to do now. So I think the fact that public sector banks now have the confidence on actually competing on turf which was not their native turf, I think is enormously powerful as an example.
Okay, no, that's very good to hear, that if this culture can also, spread out into other public sector banks. But I mean, let me kind of ask a more, I don't mean to offend, but an offensive question. Do you think that a large part of the success that we have seen is also because the times are very fortuitous? RBI went through an asset quality review, and after COVID, we saw clean balance sheets even among corporates. So this is also a positive ambience.
Absolutely. So I think if you were to look at the profitability levels and you were to see where credit costs have gone, I think it's very important. What is important is to see how you can make sure that this continues. So as you said very correctly, there were challenges in terms of AQR. Why were the challenges in terms of AQR? Because you had underwriting challenges. So what we have done again in BOB is to bring in a chief risk officer, who's again one of the most senior professionals from the private sector, because you don't want that the same kind of mistakes should recur. Similarly, again, the fact that we have been able to now deliver growth which in retail loans, because that was the key differentiator vis-a-vis the private sector at 28% faster in the market, means that actually you have been able to do more than what fortuitously you actually have landed up with. I think we should take this as an opportunity for change. Now, what you said is a positive environment, tailwinds, gives us that little bit of space to think ahead and plan for the next 5 or 10 years.
Okay. Oh, absolutely. Now, for a familiar question, what is it that SBI gets right that can be transplanted into public sector banks, non-SBI banks?
So I think it is really what are the advantages that SBI has. One is again in terms of the depth of management, right? And number two, again, that you have continuity in management. So I think it will be very difficult for us to get the same kind of management team, because it develops over many years. But you can transform that into an advantage by making sure that you attract talent laterally. That gives you again the same advantage of quality, but along with that again a bigger advantage that you actually are open to outside ideas, and you can bring in pretty much ready-made experienced talent within the bank. The second is in terms of continuity, and I think that's where the government has done a great job by actually putting in a framework which allows you to have a 5-year term for the CEO, and after that a further extension of 5 years. For us, I think the fact that Mr. Chand will be taking over from me over the next few weeks, who has been part of the management team for the last few years, is again something which is very, very important. Now, it's important that we pick up these elements which again have succeeded in BOB, whether it is again the fact that we could bring in a private sector banker, transformational ideas, whether we could bring in somebody with SBI experience, or again the fact that you can get in lateral talent to pick up these ideas and build upon them. So what again seems to be partly driven by circumstances, but partly again by a few good things that happened, is something that can be replicated more widely.
Okay. I hope all these lessons are being learned both at the government level and at the various bank management levels. Thank you very much, Mr. Chadha, for joining us and giving us an idea of what lessons we can draw in what has been a successful experiment in the transformation of Bank of Baroda. Thank you very much for watching this special edition.